As infamous market-seer, W.D. Gann once noted September 22nd, which is the autumn equinox, is the most important date in markets. That's when markets are more likely to reverse than any other day of the year. And for some reason, stocks, commodities, and currencies have a curious tendency to make major tops or bottoms on that day. Scott Menard, Chief Investment Officer of Guggenheim Investments, warned that Monday's sell-off was a clear crack in the recent uptrend that could see the S&P 500 fall 10% or maybe as much as 20%. Menard believes that assets across the board are richly priced and that the market is ripe for a correction. And it didn't help to have the impact of the Evergrande credit fallout, and also the potential for disappointing earnings and economic data as additional risk factors for an extended market pullback. The next question we have to ask ourselves, how much further could the market fall? Well, let's take a look. And today we're going to take a quick look at two charts, beginning here with the 15-year monthly on the spiders or the SPY. And we can see that the close on Tuesday was 433.63. Now we can also see that the top at this point here, and we've talked about this before, from that point there to the 20 EMA, that's a pretty big separation going all the way back. Nothing is greater. Now, all the way down here to the 50 EMA is even a wider gap. So there's plenty of room to fall if we want to do such as here in 2020, fall through the 50 EMA, or back here in late 2018. From that point there, we came down to the 50 EMA, and we did that same thing here in 2016. So it's not unheard of. We can fall that far. I don't think at this point in time that's in the cards, but let's take a look at the oscillators. Moving on down here, volume's not going to tell you much other than there's just a very slight decline. Moving here into the MAC, you can see that we have the fast line just slightly turning over. So there might be a topping process here. There's a pretty good separation between the fast line and the slow line there, so anything can happen. The market could come on down and we can get a reflex move off of that slow line if that's what happens, or it could come on down and through, and if it did that, we have a long way to fall. But right now we're not really sure exactly what's going to happen because we have a pretty good elevation there, and there's plenty of strength too. Then into the histogram, you can clearly see a topping process there, and we also talked about a topping process in the last update. Now here in the price rate of change, we definitely see a peak at that point, and it's coming down very sharply. I think it will, the fast line will come through that slow line here, but I think we're going to do some more sawtoothing here, so I don't think it's straight down. Into the RSI, we can see that we've moved down to the 71.41 level from above 80 there, and it's come straight down here. Possibility of it continuing as it did here in early 2018. Also here in later 2018 we had a pretty good fall, and as well there in early 2020 everybody knows what happened then. So those are possible, but I would say the more likely and the greater probability at this point in time is to do some sawtoothing, perhaps on our way down, just like the Russell 2000's been doing. Now, moving here into the stochastics, you can see that we pierce through the fast line, pierce through the slow line here, but again, that doesn't mean that we're heading for a crash, because just like this period here, there is plenty of sawtoothing all along through there. Now, we do want to watch out for a drop if it does happen, but I think the probabilities is a sell-off here and then a recovery. We'll talk about that when we get to the next chart. into the Williams, pretty much the same thing. It still shows that we have plenty of strength left. Back up to the price chart, and one last look. Now let's go take a look at the weekly chart. And now to the 2-year weekly chart on the spiders. Now, if you look, we can see the bottom channel line here we've talked about before, more or less riding along that 20 EMA up through like that. And then the top line I'll have to draw. Hopefully it's a straight line. If not, you get the idea, through there. Now, this particular sell-off, we've been working on this for, say, a week or two, and it's no surprise. We talked about this in the latest update. So you see we have this sell-off here, but we're still only there at that bottom trend line. It's possible that we can break through. We did on the daily, but on the weekly, we're still right there at that 20 EMA. Now this sell-off so far looks kind of like this sell-off here, this sell-off there, this sell-off, and perhaps this sell-off here. If you go back into early 2020, that sell-off, there were some very heavy selling on a multi-weekly basis. We don't see that selling here currently. Now we had a bad day on Monday, but a bad day doesn't make a correction on the level that we had here in 2020. So for the time being, I'm saying that the probability is more likely a pretty good sell-off here, but then we get back on track perhaps next week, maybe the week after, something along those lines. Now let's go down and take a look at the volume. There's nothing there that's going to help us. And into the MAC. We talked about this very large move here, this arc, and we knew that we were on the downside. First of all, because we were on the underside. The fast line was on the underside of the slow line. Now, in some of these areas here, they're moving together in tandem, but for the most part, you could say that we're on the underside. And when you have that, that shows a little bit of weakness, even though we have a relatively high level above 10. But we're still moving through this arc, and we're on the downside of that arc, and every once in a while you can have a crack down into the histogram. That's not going to give us too much more insight there. I don't think these other oscillators are either. Say the price rate of change, not going to see too much there. The relative strength, we did have a pretty good plunge down below that 50 or midline, as we did here. Certainly here in early 2020, but I don't think we had that elevation as we did way back here. We were way overbought at this point here, and we're certainly not overbought at this point here. So right now I'm saying the probabilities are that this thing is going to sting. This pullback is going to last through this week into next week, and hopefully we'll start to see some signs of some bottoming and basing. But for right now, I would just say hold on to your cash and get ready for some opportunities that are coming up. And for today, that's ChewDog Charts. Thank you.